Valens Research, Uniform Financial Analytics.
NXPI, for those of you who don't know, NXP Semis, they make semiconductor chips that help with things around Internet of Things, sensors, all these other areas. And so they make incredibly important chips, which is really relevant also right now because of the fact that we're in an environment where obviously chips are scarce. And not just are chips scarce, but there is infinitely more demand for their specific chips because of how important their chips are for the Internet of Things and things that are going on in terms of new emerging ways to use semiconductor chips and use and connect everything to the world. Now, one of the things that might jump out to you is everything that we see here on a PVP chart, but where I want to take you first is to actually look at something far simpler than looking at a return on assets. Let's just look at EPS. So many people just focus on PEs and EPS when they think about analyzing a business. And even if you look at those metrics, you can see how totally misrepresentative the as reported metrics are for NXPI. You look at as reported EPS for NXPI, and you would think this company saw EPS drop from around 90 cents in 2019 down to only 18 cents last year, and it's going to stay low. In reality, so right, you would think that it dropped by almost 80% in terms of how much EPS dropped in from low to incredibly low levels. In reality, EPS only dropped modestly from around $6.90 to $6.10. It is a far more profitable business than as reported EPS would tell you. And in the midst of the pandemic, it lost far less earnings than as reported metrics would have you realize. And it is primed to see EPS expand massively this year, which only uniform accounting metrics show us. Not only that, but on an as reported basis, you would see declining EPS and you would see a 20 plus times multiple for valuations. On a uniform accounting basis, we can see that it has this acceleration and it's only trading at a 17 times multiple. The market's not pricing in how strong growth is for this company, right? Because of the fact the market misunderstands if this is a declining low return business or if it's a improving high return business. Not only that, look at this. Every single year for the last 5 years, as reported metrics would tell you that NXPI, this company that's supposed to be a huge supplier to the Internet of Things and to connection to Wi-Fi and all these other things that are booming areas of growth, was shrinking. You would say, holy cow, this is a low return business that is shrinking in the midst of when it's supposed to be growing. This is a classic tricky semiconductor that is a garbage business. Run away as fast as you can. It's only when you see the uniform accounting data and you see reality that you can see how profitable the business is. And it's been reinvesting because of the world that it's in and the ability that it has to scale because of that demand. And so once we get through issues in terms of semiconductor supply, a name like this is a really compelling name, but we could only know by looking at the right data. And that's the power of uniform accounting and why we think it's so important and why we have this webinar and why we discuss this. Because if you don't look at the right data, you miss the right insights, and therefore you miss the right stocks to buy. And therefore you don't get the best investment outcomes because you're looking at bad data.
Valens Research, the world's leading source for uniform financial analytics.